I've said when we get to the bust, part of the reason we're going to get to a bust is because the Fed's attitude right now is going to be carried forward. They'll ease, I think, this quarter, but they're going to be behind 8 ball for a while into this recession and ultimately into the bust because Powell has etched in his mind, I want to be Volcker. I don't want to do what Bernanke did. He said it over and over. We're not going to blow up the money supply again to bail out Wall Street. So all through a time when we're going to be in a, like I said, potentially the biggest financial crisis in history, meaning bigger than 2008-9, and the biggest central bank in the world that does most, they all do it. At the time when you're going to need liquidity more than you ever needed it, Powell's going to be, I'm the Volcker here, I'm going to be the disciplined guy, and we're not going to do that again. I promised you I wouldn't do that. They will do it. I guarantee you that the easiest prediction I can make is that the balance sheet could blow up to 30 trillion. Or more in response to a free-falling financial system because they waited so long, because they kept thinking, as long as we stay the course, it'll right itself. And then all of a sudden they see banks failing across the world. And it's not just Powell or not just the Fed. It's the ECB, it's the Bank of Japan, it's the Bank of Canada, it's probably China. They're all going to be sitting on their hands to some, or at least easing a lot less than they did in 2008-9 initially, thinking, we made that mistake, we don't want to make it again. And then it's when the deer in the headlights moment comes where they go, oh my God, we can't worry about that. We got to save the system. Then you're going to get money after money after money. So I've never been worried about who's going to buy our debt. I can guarantee you that the Fed's going to buy every single debt instrument they can find, U.S. debt instrument they can find, if they're trying to get 20 trillion into the system. Don't mistake what I'm saying. I'm not saying they're going to go from 0 to 20. They'll put a couple trillion in and say, that's it, and then sit on their hand, and a month later, nothing's changed, going down, and then another 3 or 4 trillion. That's it. It'll take them several months to get to a point where they say, we just got to do whatever we have to do to save the system. We're going to be the buyer of last resort for at least the next 12 months for sure.
So U.S. dollar short term, you still see it going down, low 80s on the index, but during the bust, you're expecting it to soar.
Yeah, I think between now and the bust happen by the end of the year, the dollar can continue to go down early in the bust. Because, as I said, they'll be easing. So there'll be some concern that, gee, we're doing it again, even though it's not nearly what we should be doing or what we did last time. There will still be plenty of people on Wall Street saying we shouldn't be doing this, and he's putting more dollars out into the system. He's printing more dollars. And it'll keep pressure on the dollar into the early part of the bust, is my guess. But there comes a point, there's a crossover point in the bust where the whole world says there's only one place we go if we get this scared. It's the U.S. So I think probably within the first quarter of the bust, or first third of the bust, certainly, you'll begin to see the dollar get bid up again. I think you could go from 82, assuming that's the number, back to 120.
That's what happened in 08. That's what happened in 2020. But this most recent crash, and it really was a crash, people were dumping the dollar and buying gold. Trend's going to continue.
Time in the past where the dollar didn't get bid up initially in a sell-off. We tend to use
recency bias.
Recency bias, and say, well, how come? I don't worry about short term because there was a narrative out there. There was a reason maybe why the dollar was already rolling over. And there was reason for people to doubt Trump's policies, and think that this madman's going to blow us up. I'm not really surprised that we had that situation. It was kind of, the momentum was already on the downside anyway. Yeah. And I think we have been for a number of years kind of the place where the foreigners put their money, where when Trump alienated Canada, Mexico, and Europe, you started seeing people, I think, taking money back.
I don't know if that trend will be so quickly reversed. I agree with you that the U.S. is so intertwined in the global economy that the idea of operating without the U.S. dollar and not being central is a ways away. But I do see a trend in Europe and Asia of saying, I don't know if they're going to be getting in the U.S.'s corner as quickly as people think once a trade deal is done. I think there's been a lot of damage done in terms of trust and reputation. It may be going that way for years to come. Have you ever researched what a post-Bretton Woods, monetary system might look like? Have you ever sort of whiteboarded that or give it any thought?
There's talk about gold-backed dollar. Going back on the gold standards. And well, not just bricks. I think Trump's floated the idea of doing something that, like what I keep saying, because I was talking about even before Trump got elected, is, basically the Austrian school. That's their whole thesis, and it's coming a lot sooner than I think it's coming in their minds. And I've said it would be suicide if we, even if it's a very small, not a token, but something that would at least say, hey, gold playing a role in this now. There is an anchor on this now. If we did that, it would prevent our central bank from responding to a free-falling financial system. They would either have to, ultimately, they would have to scrap that. Let's just theoretically say they did it the next year. If we're not some sort of a gold-backed dollar, and this thing hit, you're not going to all of a sudden say, well, we tried that for a month, let's reverse ourselves. You're going to sit there and say, and especially given, central bankers and Wall Street, frankly, who think what we did in 2008, 9 through until Powell took over was lunacy. So they're going to all say, well, it's a good thing we have a gold-backed dollar now, and that we've tied the central bank's hands, until all of a sudden you're watching this thing spiral down. I don't think we're going to get there that fast, obviously. Even if Trump has an idea like that, or the administration has that kind of an idea, it'll get scrapped during the bust and might come back down the road. This monstrous flooding the system with money is going to lead to the biggest inflation cycle we've seen.
Let's talk about that. Let's. I want to hear if any of your price targets have updated. Let's maybe just go pre-bust with some of the key commodities and indexes, and then post-bust.
Okay. Yeah. So I like I said, I raised S&P to 8,000. I might want the precise date, and man, I've been notorious for pushing it out because the cycle pushed it out. I've been saying it could happen, and I use the word could. People seem to forget could isn't would. At least they tell me they show me they forget it on Twitter. It could happen by the end of the summer, which means by the end of August or the end of September at least. So the next 5 or 6 months in a parabolic, it can happen very fast. You could cover, as crazy as it sounds, you could cover all that ground in 3 or 4 months, or it might take 6 or 8. I don't know. I'm not worried about that. The clock's not going to strike midnight and the market turned into a pumpkin. So, why are you worried about some precise time? You just play it while it's going. So I raised my SP to 8,000 by the end of this cycle, by the top, and I believe this is going to ultimately be a 43-year secular bull market top that started in August of 1982. And I raised my Nasdaq target to 27,000 from 25,000. I'm definitely in doing that. I'm saying I am in that camp that believes that tech will still lead us in this last leg up. I think the melt up really has been this whole leg from 2022, or certainly from the lows in October 23. But this threw a curveball into it because you had a 20% decline in the S&P. So I was looking for this to be the leg to where you'd have maybe 5% pullbacks, but not 20. So this is the third leg that I think takes you to the top. And I didn't change my Dow target, still 55,000. My Russell target, which is the most controversial because it hasn't moved yet, I still say 3,300. So if you do that from where it got to, my trio where it got to 1,800 anyway, maybe 1,700, it's not quite a double, but it's certainly over 80%. And people think that's nuts to say you could see that in the next 6 months. Like I said, it runs to 9 months instead of 6 months. So be it. I'm not worried about the time. Any way you slice it, it's going to be the biggest rally in history is the way I see it. So not just Russell, the whole market covered that ground at that time.
Just human psychology is just the most amazing thing. We can go from this fear that everyone's just gripped with this fear and confidence is lost forever. We've broken support. It's over. The way it's shaping up, Trump can ride in here, secure some deals, confidence will get shored back up, and you can just kind of see everybody coming back, right? And man, to go from fear to euphoria in a matter of, 3 months, 6 months, there's a part of me that thinks the confidence was shaken so strongly that some people will have a hard time throwing caution to the wind and chasing this market. When the S&P goes through 6,000 to a new all-time high, you know what? It's happened. It's going to be a little more challenging had we not had this dramatic sell-off. I think it will be harder to get to those highs is what I'm trying to say.
I view it the opposite. As I say, and not to you, but say to a lot of people on X, watch and learn, because this is going to be a learning experience for everybody. I mean, I could talk about it, but I'll be flabbergasted too. But I have said for decades, investor psychology is the most powerful emotion in the world. It's more powerful than love or hate. It's truly, it will get people to do the most insane thing out of fear or out of greed. Amazingly, and I was talking about this when it was only down 3 or 4%. People fought this market all the way up. They only capitulated and started talking more bullish because of the momentum of the tape after it got above 5,000. Wow, this isn't going back to the lows. Gee, and then they started raising targets, and people are saying they're copying you now. I go, no, it's just psychology. They're going with the tape. They weren't getting up to my levels, but they were, 6,500, 66, 6,700. Somebody might have 7. These are people who told you it was going back to new lows all the way for 2.5 years. But then as it started to lose momentum, like I said, they had one foot out the door, you could see that they didn't have any conviction. One thing I say is my call, as bullish as it is, as crazy as it is, it's coming with high conviction. They had no conviction. They were just there because of the tape. I knew as soon as the tape disappeared, they had nothing.
They were gone.
They thought stocks were way overvalued and going to have to go down at some point. So it was very easy for them to go transition from, I'm cautiously optimistic to, oh my God, I'm really bearish now. And the more the tape went down, the more that fed into their fears. And then you started seeing the leapfrog of how low can it go.
And those same people are going to do a 180, you're saying, when the market, they're going to do what they did before and they'll get right back on the train.
Not right back. It will be gradual. In other words, what drives, that's why I say a wall of worry is fuel for the next move up. There are different levels. The early people will jump on. Well, first you'll have short covering, which you saw some pieces of that big run up that day. But there's a lot more short covering to be had because we also got the retest that caused people to get bearish, more convinced again that we're going to new lows. So there's a lot of shorts in the market. That will help fuel the first advance. And some of the early people that will say, yeah, I was bearish, but boy, the tape's telling me I'm wrong. And they'll do it. Maybe the faster traders, the smarter traders, whatever.
Yeah.
A lot of the people won't shift from bearish until we're at new highs, and even then there'll be a bunch of them that won't shift until we're 10% from the top, and then they'll be yelling at me for getting bearish. They'll be saying, "Don't you see this thing has legs? It's got 3 years to run. You're turning bearish away. You're going to miss a lot. It's going to 10,000, whatever." That will be what you'll see at the top. So it's not that they all turn from bearish to bullish in the first third of the move up. It's a gradual thing where more and more will jump on the bandwagon. Most of them will see it as a bear market rally until we see new highs. Yeah, we saw it, 2022 to 23 or even 24, we saw that. It was only after it got above 5,000 that that a bunch of those bears said, yeah, it's no longer a bear market rally. This thing can go higher.